Hello, traders. It's 8:01 a.m. Chicago time on Wednesday, the 17th of October, 2018. Thank you for joining me again for another segment. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the equities have come off a little bit. The laggard today is really crude oil, down almost 1%, 67 cents, trading at 71 and a quarter. Crude oil's been on a whipsaw over the last couple of days, really mostly in balance, but pushing, just swinging back and forth. A lot on the news involving the Saudis and the assassination or murder of a journalist, an American journalist who was covering the Saudi royal family. There's just a mess there, it seems. So there's, U.S. Secretary of State had to fly over there and so on. So that's been causing a bit of a whipsaw in there. Also, some moves against Iran and so on. In the indices, the Russell's down 9 points or 0.57%. And the allocation this morning looks like it is to safety. Looks like risk is slightly off. The money has flowed into the 10-year note. It looks like it's only up about a tick. The bonds are up 6 ticks. The Bund is up 44 ticks, and the U.S. dollar is up 33 cents. Gold is down just 10 cents. So to me, it looks like a mixed bag, but mostly risk off this morning. Yesterday was, of course, an exceptional day by most measures. We'll go over that in a minute. Just really interesting trade. In case you didn't know, yesterday the ES closed 69.75 points higher. On that big sell-off day on the 10th, it closed 106.75 points lower. So we have taken back quite a bit of that sell-off day of the 10th and just chewed through a lot of the levels that were created on that day. Let's take a look at what we expected yesterday. In terms of what could interrupt our auction today, we have the 10:30 crude oil inventories, 10:30 Eastern crude oil inventories. I do not have estimates today. For some reason, my news service is not providing those. But we also have the FOMC meeting minutes. The FOMC meeting minutes at 2 p.m. Eastern. 2 p.m. Eastern. It's about 7 p.m. London time. And that's what we have to look forward to in terms of releases. As far as reviewing yesterday's action, if you recall yesterday, the main idea, the primary expectation is for the market to pull back a little bit and then to push through these last two highs. Basically a double top, and to end the one-time framing down. These are inside days, as I talked about. In fact, I showed, I believe somewhere in the video, I showed how it has compressed quite a bit. Let me find that right here. Right there, how it's been compressing quite a bit. Higher lows, lower highs. A classic kind of consolidation triangle, and I talked about the potential for a break from here to the upside is what my expectation was, and to caution when that happens. Now, my caution wasn't strong enough because I did talk about the 2800 being a key area, which happened to come along at about 1:30 Eastern yesterday, and it just did not get any respect at all. I mean, we saw it kind of squeeze through and squeeze higher and squeeze higher and squeeze higher all the way to 2820, basically. Not fun given the confluence that I saw in that area. But overall, scenario one did play out. Scenario 1 did play out, and we ended up with a day that looked like this on the 15-minute. Let's switch this. So we have this consolidation right here, and then we broke to the upside, and we're taking back some of the structures that were built on the sell-off day, which was the 10th, October 10th, and we're making our way up there. We closed just 2 ticks from the high. The expectation is we're likely to drift higher on the reopen. The auction was interrupted by the end of the pit session, and then it has come off since. So overall, this area here gave us a break. We pushed through. We had a small stop run, a small spike, and then we pulled back into the range, and then we started to do the grind up. By the way, the mid here was just beautiful in terms of a trade setup, a structured trade setup. The mid was a beautiful thing yesterday. Let's look at that. Here we go. So rewinding back. There it is, an open auction. Open auction, it breaks lower, gets to the prior day's IB, pushes back up, breaks higher, breaks lower. So what we had at this point is an open auction that had widening rotations, but really to trade from the outside in until we got the breakthrough right here, 10.75 points up with a continuation of 3.75 points. We come back to the prior high, we consolidate, and we finally move back to mid VWAP. This was mid VWAP and the double top on the open. There's a double top here at 75, 75, and a first push at 76.50. So the zone that I was interested in, the long in, is right there between 76.50 and 75. We touch it, push up 3 points, push back through, consolidate, and that's where the launch point was for yesterday's rally. You could see from down below that other than this rotation here, the up rotations were making more headway. So an interesting thing that occurred yesterday. So here we push through. We push through the 2800, 2801.75, pull back, pull back to the 2800, and then we're just not able to get below it. Just not ideal, but that's how it played out. So we ended up with a low volume node at 2800 right here. Just very little respect for that area. Again, unfortunately, but that's just how the cookie crumbles sometimes. And so we ended up with a market that closed near highs on a very wide range, but the delta was just not there yesterday, given the amount of movement we had from the open. So if we look at the total movement, from the low, we basically had about 50 some odd points from the low, and was it 60? No, 50 points from the low, and the open was 27.73.75, which equates to the zero line, which is right here on the delta. But by the time we finished at the high, the delta was still only at 4,800. And while it consolidated into the closing range, the delta was getting pounded on back to zero. So this was more of a drift up at, two things. I don't know what each participant's intent is. We can't know that. The market wouldn't exist if we knew. But what I can do is potentially explain what is going on here in two ways. When you have price movement that is really high, or very far away from the open, but Delta is just kind of teetering on zero or is very weak. Like I would expect Delta to be up in the 30 plus contracts yesterday in terms of aggressor, buyer aggressor, so positive 30,000 or so. But we just ended up with 4,800. In fact, we went back to zero, as I said, right at the cash close. Cash close for me in Chicago is at 3 o'clock right here. And it was basically at zero right there. So to me, it's just two things could happen that would cause that. One, the offers are pulling as price is moving up. And so price is making good progress on little volume. Okay, so that's one way that the delta can move or lag price. The other is that as price moves up, we have sellers hitting the bid just as aggressively as the buyers lifting the offer, which gives us a slightly positive win for the buyers, but there's some selling going on, and that's what I saw. So if we look at the volume scope, this is the overnight session. If you look at yesterday's volume scope, you can see that they're hitting, you look at the red, there's quite a bit going on both sides. There's some sprees, some quick pushes up where we can see there was little volume that got lifted. But overall, we saw a lot of areas where there's a lot of absorption from both sides. So as sellers hit the bid, they are absorbed. As buyers lift the offer, they're absorbed. And overall, the delta just wasn't all that aggressive yesterday, even on the strong pop. So on a strong pop like this, I would expect it to be quite thin. A lot of disparity between, as you see right there, 340 versus 8. A lot of disparity between what's being lifted at the offer versus what's being hit in the bid. But as we move on for the day, it seems like there was quite a bit hitting the bid as well. Right there, just an increase, just a lot of just hitting and hitting and hitting as the market's moving up. So overall, the buyers, won the day in terms of price. But my point is, I didn't see an aggressive delta. As we pushed up, and I found that interesting enough to bring up. It's kind of happened on thinner volume. The other thing that we can look at is down here. The other thing we can look at is down here where I'm tracking the range, okay? And this goes back to July 20th of 2015, the swing low. And I'm also tracking the daily volume, and I'm creating a histogram of those two parameters, okay? So yesterday, the range-wise, we went 50.5 points. The second sigma of the range going back this many days, approximately 900 days, the second sigma is at 49. It's right there, 49. That represents 95% of 95.45% of the data set to the left, and we closed just above 2 sigmas. So this occurs, 4.5% of all days going back to July 20th, 2015, where we finished 50.5 points or greater than 49 points. So price-wise, we did pretty good. We went to 2 sigma. Volume-wise, we were in line with the prior day, which was this day here was just a consolidation day. Very relatively tight range. That day's range is outlined right here. It was only 30 points, and you could see that the volume was on the edge of the blue, which is the first sigma, which is the first value area of 1.4 million contracts. So again, that's another indication that Yes, price makes the move, and price means is what we trade, but it's saying something about the volume. I don't know where that leads. We'll find out over the next day or so what that means. But all I'm saying is there wasn't all that much participation in terms of volume. Here's the overnight session. We finished near highs, and then we just go completely sideways and dead until the European open. The Europeans come in and push immediately higher, 28, 24, 25, and then start selling it below the mid and looking kind of weak. Multi-distribution profile. We have 3 distributions again. It looks like I'm flipping you off. 3 distributions again, and it looks like the point of control may shift down potentially as we hang out here for the next 15 minutes or so. And so overall, just looks it looks to be opening kind of weak. Yesterday's point of control shifted to 28.1275. Yesterday was a bona fide trend day, which means that we are very likely to push higher and challenge that high 28.19. This morning, my plan is really to just kind of sit back, chill, let it decide what it wants to do. As we look at our sigmas, they're very, very wide. The volatility, the close to close sigma is over 32 points for today. So there's a wide range anticipated, or potential for a wide range. It could close anywhere, as we all know. But my intent is really to wait out and see what it does early in the morning. My expectation is an open auction that continues lower. I expect this 28.15 area to hold. I'm looking for it to push lower, find a base in the 2800, 27.95 area, squeeze up, and then potentially just poke through that 28.19 before closing back in the range. Okay, so it's good news yesterday, a lot of good news over the last couple of days on earnings and stuff like that, and the market's responding to that. So the primary scenario is for us to finish or continue the range or the trend day that we had yesterday. Barring that, if we open and we immediately take a bid and push into 28.19 and squeeze through, I'm looking for it to stall out, fall back in, consolidate in the range, and then stick around this area here. This is all barring news. Stuff keeps hitting the news wires, so I don't know. Anything can happen. But overall, I'm expecting the market to calm down. Remember, the market, when you have a rally like yesterday, it's like sprinting up a hill. The market generally takes a moment to catch its breath, to reassess, to make the next move, to allocate to the next move. So the third and fourth are again open test drive type of scenarios, or open drive type scenarios. But in general, the market's likely to wait until chill out. I expect it to consolidate after breaking the high, especially, and then to chill out until the FOMC minutes come out at 2 p.m. Eastern. Okay, that's all I have for you. I've gone for quite a while. Good luck today, and just make sure you're monitoring your risk first and foremost. Okay, good luck.